All right, everything you need to know about a federal government shutdown and how that might impact the stock market. First and foremost, not our first rodeo. We've been here before. Looking back at the last 50 years, there's been over 20 instances where the federal government has either shut down or didn't have the money to pay their bills, so they had to find out some sort of funding gap program. Unfortunately, this has just become one of the aces in the hole that politicians use in order to get pork or in order to get their agendas passed. Because as of late, you can see we've actually followed shutdown procedures, whereas in the past, politicians got behind a room, shut the door, and decided, hey, let's keep the bills getting paid, but let's work a little longer on the funding program. But as of late, we like to incite fear and pandemonium and actually shut the government down. So take a look at some of the most recent shutdowns. Pink is showing that shutdown procedures were actually followed. Most recently, December 2018 into January of 2019, the government shut down for 34 days. 30 days is actually a big one. And then in 2018, at the beginning of 2018, the market shut down for 2 days. In 2013, we were down for 16 days, 95 to 96, 21 days. And, again, not our first rodeo. And we're going to see more and more of this, unfortunately. Let's take a look. Well, first, let's talk about the things that will be impacted because I think politicians use the federal government shutdown to scare the living daylights out of people. And I think it's reprehensible and deplorable when people start to say, oh, if we shut down, you might not get your Social Security check or your hospital bills might not get paid through Medicare and Medicaid. And that is just not true. The Social Security program and Medicare and Medicaid have a bunch of different safety mechanisms where even if the federal government is shut down, those bills continue to get paid. Those resources or people in those offices continue to work for another 3 months and even beyond. But the things that will get impacted, national parks and monuments. So if you had any trips planned up to DC or Yellowstone or something, you might want to think twice about them. You're not going to be able to go into those places. Federal museums, some federal research projects, processing of certain government benefits. Those benefits, food programs, SNAP, typically there's measures that continue to allow those programs to continue, but they'll typically stop after 30 days. IRS taxpayer services. Hey, maybe that's not a bad thing. The IRS closes down when the federal government shuts down. What's not affected, like I said earlier, Social Security, Medicare benefits, military, law enforcement, the Postal Service, air traffic control, passport services. These are all deemed to be essential and they will not shut down. So, when you look at that list, you kind of go, okay, if those things shut down, it might burden me a little bit, but it's not the end of the world. Let's illustrate how the stock market behaves during federal shutdowns, okay? So here's our most recent shutdowns, thanks to Wikipedia. We have one. We're on the doorstep of one. Our federal government's going to shut down in the next couple of weeks if they don't pass some sort of spending bill. It seems as though the Republicans are a unified front behind Elon Musk and Vivek Ramaswamy and Doge and Trump. They're all saying, shut the place down. Now, market, as I record this, we're December 19th. Market yesterday was down 3%. And the pundits are going, oh my God, the reason the market's down 3% is because they're going to shut the federal government down, even though the Federal Reserve actually lowered interest rates 25 basis points, which prototypically Federal Reserve lowers interest rates, the stock market's supposed to go up. I happen to think that's kind of a buy the rumor, sell the story type instance, but I digress. So people are looking at this little blip right here and saying, hey, the reason the market crashed yesterday is because they're going to shut the government down. Well, they're negligent in saying, hey, the stock market is up over 20% year to date. And when you look at this little pullback in perspective, now granted, it was a big pullback on a one-day trading basis, but when you look at this pullback in perspective, we've had 1, 2, 3, call it 4 of them in the last 12 months. So it looks like normal trading patterns. It looks like normal behavior that the market's going to take in a bull cycle. The market is going to take a breath every now and again. Let's look at the last government shutdown that lasted 35 days. This is a meaningful amount of time. Now, this one started December 22nd. So you'll notice this was the end of 2018. This was a bear market pullback that we had at the end of 2018. Some of you might remember the market dropped close to 20% starting in September. And then the government shut down on December 22nd, which was literally kind of in the trough of it all. Now, the reason behind this pullback, if you were kind of liars, figures don't lie, but liars sure can figure, you can say, oh, it's because the government shut down. The reason the market dropped 20% was because the government shut down. The reason the market dropped 20% back at the end of 2018 was because interest rates were starting to go up. There was chatter about interest rates going up. There was fear of a trade war happening. Everyone was worried about Trump starting a trade war with China, which never really materialized. And once again, this is on the heels of a pretty strong market cycle where the market's going up, and then we had this 20% pullback. Markets take their breath every now and again. Like, it's not practical to think markets just go up at a 45-degree angle. Now, if you squint your eyes and you take a step back, that's in fact exactly what they do. But at the end of 2018, the market's down 20%. One could argue, once the government shut down, that's when the stock market started to go up, right? Because in this instance, the government shut down December 22nd, right there at the trough. And from that point on, 35 days later, the market's basically recovering all of the loss it sustained in that awful fourth quarter of 2018. Let's look at the shutdown at the beginning of 2018. Government shut down 2 times in 2018. January, I believe it was the 22nd of 2018. So here we are. Government shuts down. Here we are, this spike right here. Government shuts down right here at the peak. Market drops. Okay, market drops close to 8% too, or 6%-ish. Then government reopens, market pops back up, then it pops back down. Again, if we pan out, we look at this with squinted eyes, we're hitting all-time new highs 6 months later. So on a short-term basis, the media pandemonium, the day traders, the fearmongers, government shutdowns lend itself to short-term volatility. But if you look at your investments from a longer perspective, it's really just kind of, heck, there could be buying opportunities cooked into these shutdowns. Here's another shutdown. This one happened in 2013. October of 2013, the government was shut down for 16 days. Look at the stock market here. I love this one because the government shuts down, and then you have this kind of boring, slow tread upwards. I think, what do they call Washington? Hollywood for uglies. I think these people, a lot of them are megalomaniacs. They look at themselves in the mirror and they see like a 10-foot tall superhuman of a person. And they think they have such an important impact on the overall economy. I love a shutdown like this because the government shuts down. They all go home because they're all non-essential. And the stock market just slowly trends upwards. Not giving a rip about Hollywood for uglies, not giving a rip about the government and their meaning on the overall economy. Then let's look at this one. This was one that lasted 21 days back in 1995. The government actually shut down 2 times. If you remember, it was in November, and then it turned around and shut down in January as well. Let's look at the chart here. Same story, right? So here we are. November of 1995, government shuts down, market pops upwards. We have a little bit of a lull where the market crashes to start the year off. This is insignificant really here, folks. And then the government shuts down again, market roars, it pops upwards. So what is the moral of the story? Enjoy your Christmas. Don't watch men on TV wearing makeup scare you into thinking the government shutdown is going to impact your investments. It's going to impact your life. You're still going to be able to fly around and see loved ones. You're still going to be protected by law enforcement. You're still yet going to get your Social Security checks and your Medicare bills are going to get paid. And in the grand scheme of things, we have seen more and more of these shutdowns. Politicians are using them. I was going to say as like a queen on the chessboard. It's a pawn on the chessboard. They just use this willy-nilly, and they're perfectly comfortable shutting the government down in order for them to get their way. And the overall impact on capital markets is meaningless. Hope this was helpful. Lean into our office. Give our office a call if this volatility has got you spooked, even in a little bit. Sometimes volatility is a good thing for retirees in particular because we have a tendency to get seduced by bull markets. And when the market goes up, we're happy, we get greedy, we're joyful. But when the market has a little bit of volatility, it has us looking at our portfolio under a slightly more scrutinous light. It sometimes it fires our horse senses and it gets us thinking about our money, and losses hurt us more than gains when we're in retirement. So hopefully this is helpful. Thanks for tuning in.